welcome to my morning report chart analysis videos on Thursday the 18th of January with me, Richard Perry, market analyst at Hantec Markets. We've got a very interesting move going on. I think that there is the possibility that this recovery in the dollar continues to progress. What we saw yesterday is across several of the forex majors we saw key reversals on the dollar charts, and that move has slightly been retraced a bit today, but you can see this on the dollar index where you've got this bullish key one-day reversal, which is sort of left as key support, but also starts to sort of turn the sentiment around. Now, it's been drifted back a little bit today, unwound a little bit, but you can see, interestingly enough, with the Treasury yields, where the 10-year is pushing out to levels not seen since March last year, around that 2.6% level, and the 2-year continues to climb as well. So this is beginning to certainly see the market turning around. The other interesting fact was Wall Street yesterday. There was a huge intraday rally which saw the S&P 500 closing again at all-time highs, and the market certainly turned around. And now the interesting fact is that European markets haven't really reacted to that. FTSE 100 is down. DAX is slightly higher, but it's interesting that the mixed signals on the DAX continue to be shown. You can see my futures analysis, which is on our website, on the DAX, but certainly FTSE 100 is looking like it's turning a bit corrective and falling away. But across these forex pairs today, we've seen a bit of an unwinding on that dollar positive move that we saw yesterday, but nothing too decisive yet. Gold is also reacting to that slight weakness of the dollar today, but again, nothing really decisive. Interesting moves on oil as well. What we've seen in the last few days is oil consolidating really sideways. Now the EIA inventories this afternoon could have a bit of an impact on that chart. 63.05 remains the support near term. Breach below that, you can see it sort of coming back towards sort of the 61.62 level again. But yeah, certainly some interesting moves developing on these charts. But yeah, this turnaround on the dollar is the main one. Now that turnaround on the dollar being driven by to a certain extent, the improvement in sentiment following on from the repatriation announcement by Apple overnight, deciding to repatriate several hundred billions of dollars back into the States, driving a bit of a tax return for the US tax office of around about $38 billion. Now, we also saw a bit of jawboning from ECB members yesterday as well, which could be the beginnings of the ECB sort of coming out with comments that sort of try and dampen the move higher on the euro. So watch out for that. But yeah, as I said, interesting moves being seen. Now, not a great deal of data today. We've got building permits and housing starts, a bit of Philly Fed for the States, and then building permits, housing starts, Philly Fed. Nothing really doing in terms of changes really to last month's and last month's data on either really. 129 on the housing building permits, 128 on the housing starts, 25 on Philly Fed. Now the EIA inventories could be interesting. The API inventories dropped by about 5 million barrels, so 3.5 million barrels is the inventory drawdown on crude. Build on gasoline again, and flat on distillates. That's at 4 o'clock this afternoon. Now, my chart today is the dollar CAD. Now, CAD has been interesting. Yesterday, bit of volatility yesterday on the Bank of Canada announcement. Rate hike of 25 basis points had been priced in, but the the assessment was that it was still going to be accommodative moving forward. So that has potential to sort of see the expectations a little bit pared back a little bit for the rate hikes this year, which had been sort of 2 or 3 rate hikes, possibility of the Bank of Canada. So we could see a bit of a rebound now on that. And the technicals are interesting. We had a sharp sort of long-legged doji candle yesterday. Big volatility either way, but markets seem to be sort of settling down. You see that on the momentum indicators, where the RSI is just sort of back above 40, sort of 35, pushing towards 40. The MACD line's bottoming out, as are the stochastics. You're looking on the hourly chart, and you think, well, this is a bit of a consolidation, really, but it needs to sort of move above sort of 24.90, I suppose. 24.80, 24.90 is a bit of a pivot. 2460, 2470 has been sort of resistance building in the last couple of days as well. So you can see the near-term resistance levels, and obviously we had that spike yesterday on the Magnum calendar to 2540 that then subsequently retraced. So I think anything above sort of 2480 to 2490, I think that is a real sign of improvement really in the near-term outlook. But it certainly does look as though the market is sort of bottoming for now. It hasn't yet sort of decisively decided to improve, but certainly looks as though there is a sign of improvement going on. Initial overnight low 24.25, protecting the 24.50 support that we've got in place. Sorry, 23.50 support that we've got in place of recent weeks. So I wish you good luck in your trading on the CAD. It certainly looks as though there is beginnings of a little improvement, having sort of steadied the ship, I suppose, on that selling pressure. And I'll speak to you later. Thank you.